All right, how you doing, folks? Happy Friday. We're back at it. Ordinary Income here, talking about a couple things I saw this week. It was a big week for earnings as the major tech players, Apple, Google, Amazon, Microsoft, all reported. You had a couple names, like a couple bigger names also. Roku, Robinhood made some headlines, and there was something I wanted to mention from all of them. Usually, I don't want to particularly focus on the minute details of earnings because it's hard to extrapolate to the overall economy what one company in particular is doing. But when I noticed there's a trend with a lot of companies coming out this week saying something, that's when I've started to get a little bit more cautious. And in particular, it started when I saw Netflix, where they said that they're going to start laying off a couple people, a couple workers. I think it's only in their editorial division, but it was interesting because it was the first of the biggest tech names, I guess, to report earnings. And this was a headline coming out that they are going to partake in layoffs. And as more companies started to report, there was more news of this. In particular, Robinhood last night, they're laying off as well. Theirs is more so because of they're just not hitting revenue numbers. Their business is not doing anywhere near as good as what people envision. But they're also trying to cut costs by doing the same thing. Netflix had the same issue. They said we're having a lot of competition, more than we expected. And how do you keep profit margins tight? You reduce your largest cost, and largest cost is labor here. Same with Robinhood. They said we're going to be getting rid of some people as well. Ford, they're cutting 580 workers from, I think it might be plants or it might be office, but let's see, 230 agency, 350 salaried. With the recent Twitter acquisition, Elon said in order to help Twitter's bottom line, he's going to be looking into firing workers as well. And then the biggest ones, in particular, Amazon last night reported. And what did they say out of their reports is that they're not going to be chasing physical or staffing capacity anymore, meaning that they're not going to be looking to, make more money by getting more people to get more products out the door, to ship more products. They're more so worried about, getting more on the side of fulfillment and pretty much improving product quality, so to say, or productivity, not quality, my bad. They're looking to improve productivity. So of who they do have, they want to make sure they're working better rather than getting more people to aggregate more and to fulfill more demand. Amazon layoffs are something that might be interesting because they're definitely looking to cut costs right here. Morningstar pointed out that they had a horrific earnings report yesterday. It was like their first loss in, 7 years. They have negative, or not negative, but growth for all of the big tech is at like 10-year lows, at least their growth rate, year-over-year growth rates for sure. Now with Amazon, it's a little interesting because they have a cloud service and they have obviously the physical service. Cloud service is still absolutely crushing numbers. So I would assume if they're looking to maybe not hire as much, it would be more on the factory side, but it could also be on the cloud side if numbers dictate that. I don't know. Google had an interesting issue. They haven't mentioned hiring, but what they saw was that revenues went up. However, profit margin went down, which means costs also went up at a higher rate. And again, how do you reduce costs? You have to, you cut labor. You're saying if we can make same money with less people, well, let's have less people then. So you cut jobs. And in particular, it is, I think there's a lot of leverage, not a leverage, but they think there's a lot of availability to be able to. So you got a little bit of room to cut, especially since we're at 3.6%, which is the same as pre-pandemic. We have rarely been in this 3.6% range since 1948. It's, pretty 2000, even in 2006 before the GFC, we weren't there. I mean, we've had it in like the 60s before then. And then there was other times, but you also have to account for population sizes, but it's a pretty rare occurrence. Usually if you're at 3.6, it's very healthy. Meaning that where can we go? I think, it's reasonable to say that you have a chance to go to unemployment at 5% and you'd still say, all right, it's still pretty healthy. Maybe even 6. So I think when there's room to go with unemployment, when you know that the job market's up, I think a lot of these companies are looking and saying, well, we have the availability to let go of people, especially if their profits aren't going to be met, their profit margins in particular. Why would you hire if you're already not making as much money as you want to make, and now you want to incur a cost? And you think about hiring someone, when do they start becoming profitable? It's not right away. It'll take maybe 3 to 6 months, at least a month for sure when you have to do training. And most of these jobs, I mean, you're looking at a onboarding role, a situation like that. I mean, I work in tech, so I have an idea that when you start a new job, it'll take definitely a month to get acclimated, and then it'll take a couple more months to figure out like what you're trying to do and how to become very useful and very efficient. So when you're looking at that, like it takes a little bit of time to become profitable. So these companies might be looking and saying, why hire more people rather than just kind of utilizing the people we have, utilizing them in a better space, possibly even like doing a little internal restructure as like changing divisions, changing role titles and all that, and pretty much get the most out of the people that are running the show. In this case, for those tech companies, it's your software engineers, and for Ford, it's your mechanical and industrial engineers. So I think there's definitely an availability of room to run. Now, with that being said, I did a video a couple of weeks ago, and I was saying we have a great unemployment rate, and yet we have a ridiculous amount of demand still not being met. Prices are going higher because demand is high, supply is low, but there's not enough people available. Every job, every person who wants to work, there's like 1.8 jobs available for them, and in tech there's even more. So what happens now when you have those jobs that were hiring like crazy in the tech space? They say we're not hiring, but we're also letting go. Well, you could possibly see a shift that would help us with our demand issues, because a lot of people were going to jobs that were not necessarily related to supply chain, more so related to higher paying jobs and tech roles. Tech roles don't necessarily help us with the demand issue. You still need people working in supply chain, working in wholesale and retail, and you need people working in the process of getting food from the ground to your grocery store in order for the demand to be met of people wanting to buy more groceries. And a tech job, working for Salesforce, working for AWS, like those are great paying jobs, but they don't help the overall economy in terms of how can we ease our demand. Now, those same companies, those big tech companies are saying, we don't need as many people, we're laying them off. And a lot of other companies are doing the same, and they're looking at each other saying, well, I'm not just going to be hiring the person that Salesforce fired because they're at Salesforce when I have plenty of those engineers or those tech people. Instead, you might be seeing a shift that's saying, all right, people still want to work. They need to make money. The tech roles and the high paying roles aren't there, but what is there are these roles in which we need people, in which the demand is high. So stuff like truck drivers, like electricians, like anything in the supply chain, like I said, that gets your food from the ground to the grocery store or meets the demands that we've seen skyrocketing. Oil is the only caveat I'll say, because it's a little different, but there's a chance that we could see people moving from high profile tech roles to roles that are more in the demand chain, supply chain as well, and thus helping us ease away the concerns of low supply with high demand. Demand is still going to be there, but there might be a chance where we are better to attack the supply side because you have more people available working on that supply side rather than working on, in jobs that don't necessarily impact the supply chain and the supply side as much. Those are just my thoughts. Hopefully I phrase them in a way that's easier to understand. But what does it mean for you? I think this is all looming under the fact that people are believing there's going to be a recession. I know GDP numbers came out. I'm going to talk about that probably sometime next week, still so I can digest these numbers. But I think what it means for you is that as I've been saying, I don't think there's ever a wrong time to gain more skills, become more valuable at your company. If you're wondering how do I avoid layoffs, that's the number one answer, is to bring a lot of value to a company in which they say we want them to stay because they're able to do a lot, or at least we saw that they've gained more skills, so they have the potential to at least learn more to help us continue to grow and produce and do whatever the company wants. Becoming more valuable, gaining more skills, even if it means you get laid off of your current job, the opening is available as of this moment. Like I said, there's still plenty out there where if you're valuable enough, someone will find you. Everyone's always going to pay for A-grade talent, no matter what. So learning some more skills, I think, is the best way to help yourself kind of avoid these layoffs, and if you do get laid off, to be able to find a job quicker. I work in tech. That's ironic because I've been saying that tech are the ones that are firing, but at the same time, if you're a fantastic programmer, you're going to get a job no matter what. And even if you don't, if you're someone who works in business admin and all of a sudden you have the sharpest Excel skills because you took a few classes, or you can maybe do basic programming, which you can automate some, reading files or Excel stuff. Again, that's what helps with the money. Automation is the biggest thing anyway. So all of a sudden you can speed up a process that was going to take a few hours into a couple minutes. That helps with revenue somehow. So doing those kind of things to help yourself out is the biggest thing. But that's what I would say is what it means for you is that the hunt for quality is definitely going to be out there. So if you can make, if you bring quality to yourself, it's going to be a great situation for you in particular. I think what it also means is that we might be seeing a shift into jobs that are much more manual labor, much more supply chain based, which means we could be seeing some alleviation to food. But I will also be talking about food prices next week regarding a couple stories I've seen. So that's my takes based on the layoffs. I'll leave links to everything. Hope you all have a great weekend. I'll leave my Twitter, and if you got any questions, leave them in the comments below or shoot me some messages on Twitter. But enjoy, folks. Have a great one.